Hello everybody, and welcome back to the Forex Rally Academy. This is the first webinar from an entire series of introduction to trading Forex. First of all, I would like you to ask something. I would like you to answer me something. So, please, the idea is like this. Please tell me, what do you think that the odds are in flipping a coin? What do you think they are? Let's say you are throwing a coin 100 times. What do you think the odds are? Well, if you thought that they are 50-50, they are actually not 50-50. It is more likely to be 51% to 49%, depending on which side is up when throwing that coin. These are the probabilities in actual life, in just throwing a coin. Maybe for some of you it meant to be luck. So if I am throwing a coin once, it's luck. But if I'm throwing the coin 100 times, it might be 51 on one side and 49 on the other side. This is more likely to happen than 50-50, to have 50 on one side and 50 on the other side. Now today we are here to discuss a bit about technical analysis. And I asked you this first question because it is the same with technical analysis. Some of the analysts nowadays think that predicting the market is actually 50-50, but it is not, because there are traders using technical analysis or fundamental analysis, and they have a higher probability on going into the right trade than losing money, than going against the trend or against the next move. They are actually using technical analysis or combining technical analysis with fundamental analysis, with sentiment analysis. And these three together, which we will be talking about in the next webinars, we will start with technical analysis, but we will continue with fundamental money management, sentiment analysis, and so on. You will see that the probability is in your favor. You'll be on that 51% chance to get the right side of the coin up and not the 49%. Let me tell you about me. I am Răzvan Mihai. I am certified as a financial technician by the International Federation of Technical Analysts. I have over 6 years of experience in technical analysis and trading. I've been doing some money management. I am also the head of trading at Hazewell Asset Management. This is a closed fund. This is a VIP fund, which I am thinking of letting it available for other type of clients. I'll do a sub branch of this. We will be discussing in the future webinars. I'm the author of the upcoming book for experts, and you'll be finding some interesting stuff in here that you are not currently finding in the Forex market. You'll not find them in the current Forex books. And also I have written over 10,000 technical and fundamental analysis for one of the top 5 European brokerage houses, and I have gathered around 1,000 hours of webinars and live events. Now, enough about me. Let's go on and see the agenda for tonight. What is technical analysis? We'll be talking about TA in the first part, and I'll show you what is actually technical analysis. From my side, it's one of the easiest ways to understand and forecast a direction of the price for a specific market. We'll be talking about time frame. We'll be talking about what is a trend, and we'll also find out in this webinar what is support and resistance. My presentation is not actually that long, but I'll be using the platform, in this case XStation from Forex Rally Group. I'll be using the XStation platform to show you exactly what I mean by time frame, what I mean by trend, what I mean by support and resistance. Now, let's go on and see what is actually TA. You'll be hearing about TA a lot because I'm shorting technical analysis into TA. So you'll find on the internet and in many other books that technical analysis is actually a security or financial instrument analysis methodology for forecasting the direction of prices, and it is based on the study of past data, primarily price and volume. This is what you're going to find all over the internet. Now, you'll also find that there are three premises for technical analysis. Market action discounts everything. Price move in trends and history repeats itself. Now, the idea of market discounts everything. It is said that when the price moves, the movement, the direction of the price actually discounts the feelings and the emotions and the news and everything, the fundamental analysis, the sentiment, the the sentiment of the investor and so on. Price moving trends means that there are actually two directions in which the price can go up or down. This is uh, the theory that uh, was established around 1880 by Dow. But now you will find that with this liquidity, today's liquidity, that there are actually three directions: up, down, and sideways. I prefer to keep it to keep it very simple and say that it is up or down. After that, history repeats itself. This is one of the most important because in TA you will actually look for past events, see what happened after those events, and try to find similar patterns nowadays in the current time. For me, TA, technical analysis, is something more. I believe that technical analysis is the only way to read and understand investors' behavior in certain conditions. Let me give you an example. And this is one that I like because it happened to me, and I realized then that it is the same in technical analysis. So, have you ever get yourself burned on a flame or a very hot object because you are not paying attention to that object or to that flame because you didn't realize that it's that hot? Well, it happened to me. The second time I got into the same situation, I actually remind myself that uh, a bit earlier or some time ago, it hurt. So I was paying a little more attention to that object or to that flame. Now, this means that the fact that it hurt remained in my mind, and it is very important in technical analysis too. Why is that? Because let's say at some level, let me give you an example. Around $650 per share, Apple go to that level, above, a bit above 600. Traders continue to buy, or investors continue to buy these shares, but the direction started to change because there were some others who had the shares and thought that Apple cannot reach more than $650 per share. So they started selling those shares, and the sellers were way stronger than the buyers. At that point, the trend changed and the share price of Apple started to drop. Well, when the price got back to 600, nobody was that interesting to buy around that level, even though now the shares had much more potential to go above, and it happened. The thing is that Apple did a split and now the price is a bit lower, but if it didn't do that split, then the price would be around 700 or something at this point. So traders remind themselves when something bad is happening, but also remind themselves when something good is happening. Now, this is my vision regarding technical analysis. Let's go a bit further and discuss about time frames. I don't want to take too much of your time, so I'll be short on this. This is actually a bit of theory. You know how you're learning at mathematics a formula or something like that? This is actually theory. You just need to know a bit about time frames and understand how they work. I'll show you the time frame on the platform. So let me bring the platform here. This is a chart. This is a euro dollar chart for M15. You can see here euro dollar and after that M15. This means 15 minutes. You can actually change this time frame from 1 minute. This is 1 month, sorry. From M1, this is 1 minute to OM month 1. Or you can go with by M5, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, 1 day, 1 week, and 1 month. You can find different type of time frames. You can find even 8 hours or 20 minutes or 25 minutes. These are actually custom time frames. The most common are these ones from M1 to 1 month. Now let me show you what a time frame really means on this platform. I took here M1. It means that in just 1 minute of trading, the platform will actually tell me how the price moved. This is a candlestick bar, but you'll be seeing also charts like, and I'll show you right now some other like line charts. This is a line chart, but you'll see that in 1 minute the price moves down or up, and at some point it will stop. When the 59 seconds have passed, the time will change. See here, so a minute passed, the time started to change and the price changed. If we are going to 5 minutes, and I think the best way to understand what is a time frame is using candlesticks. We'll be talking about candlestick patterns in our next webinar from Thursday, and I hope you'll be there also, because I'll show you some tricks on how to read candlestick patterns and how to trade on candlesticks. Actually, the really interesting part of trading is starting with the next webinar, because I'll show you strategies on candlestick patterns, and after that on next Tuesday I'll be showing you how to trade using technical indicators, and we'll be discussing on next Thursday about fundamental analysis, and after that money management. It will be great. And man, I really have a surprise for you for Thursday starting today. Actually starting Thursday. It will be very nice. Now getting back, in 5 minutes, this is a 5-minute chart. A candle shows you 5 minutes of trading with an opening price, the evolution of the price during that time, and the closing price. So actually a time frame will show you on the chart what happened to the price in that specific interval. If it's 1 minute, it means that in 1 minute the price moved from here, and let's see, from the price of 106.61 all the way up to 106.67, but closed at 106.66. And this is the evolution of the price. Now if we are going to H4, 4 hours, one candle shows you what happened to the price in 4 hours of trading. You had the opening 105.55. The price went all up to 106.88, and after that dropped back and closed the 4 hours at 106.76. So this is the evolution of the price in a specific interval of time. Depending on the time frame, the graphic, the chart will actually adapt, will change. because let's say we have this default zoom, and from the chart will contain will be from January 15th all the way to current moment. But with the same zoom, getting back to M1, we'll just have from April 14th, which is actually today, but it was 1445, all the way up to current moment. So a lower time span. It is very important to know these time frames because you can actually make your strategy or have a better probability of forecasting correctly the next move of the price depending on the time frame. And you'll know if you are a day trader or a medium-term investor or a medium-term trader. You'll know depending on the time frame if you are a guerrilla trader, a scalper, or maybe you like to be a position trader to get on the trade and leave it like that. Now, you should remind each and every time that time frame is good. Time frame is very, very important. Now, I'll just take a bit the platform and let's go on to our next subject, which is the trend. The trend is a succession of rising or falling prices. Now, I made here an example. Let's say that we have an instrument, we have a financial asset which has the price at what, $100. The price gets up to 110, but after that gets back to 107, 120, 119. So the price will not go straight to 125 or let's say 120. It can go like that, but usually it moves like from 100 to 110, back to 107, up to 120, and so on. You can see here that after getting to 125, which is the top, the price started to fall, 117, 119, all the way to 100, 109, and all the way to 95. Well, this is pretty interesting. We can see that we have rising prices here, and we also observe that here we have falling prices. And the low, it's 95. It's below actually 100 from where the price started. But looking at these values, it's not that easy to understand and see what actually happens to the price, is it? Now, let me show you something else. What if we are going to draw a line between these prices? Look what happened. See? Now we get ourselves a chart. This is easier to read, easier for our eye to understand and for us to understand what really happened to the price. Usually when we see something, when we have an image of a direction, or let's say that I'm asking you to imagine a lemon. Think of a lemon and think that someone cuts that lemon and you'll see the pulp. See, now, if you are imagining this, it makes you feel or makes you think about that lemon and the taste of that lemon. Imagining things helps the mind understand better the product, the service, and everything. So this is how technical analysis work. It's way better to see, to visualize something than to just imagine things. So here we have the trend. Let's talk about the trend and how to determine if it is a rising or a falling trend. Now, the easiest way to know if it is a rising trend is to follow the highs and the lows. As long as you have higher highs and higher lows, you will know that that trend is actually rising. On the other hand, if you have lower highs and lower lows, that trend is actually falling. And let me give you some practical examples on the platform. Now we have a week one, and I'll just No, let's get a little bit slower with the time frame. Let's say we have H1. That's great. Now I'll just deselect auto. Great. Now let me show you something. This is a low here. After this low, I actually have a high here. Another low here, which is actually higher than the first one. Now that's good. But don't miss this one. See, you have a low here after this high. Another high here, which is a higher high, but the low it's pretty much on the same level. What now? Just follow the price, see what happens. We have a higher high. This high here is higher than the previous one. What about the low? The low is also higher. Good, nice, very nice. What next? We have a range, so no higher highs, no lower lows. The price is moving sideways. Next, what happened? Well, we have a high here, but the low is here. Doesn't help us that much. What about the next one? The next one is a high here, a low here. Still a higher high than the previous one, than the one before, than the previous and one before, and the low as well, higher than this one here. What about the next ones? Well, higher high, good, very good. Higher lows. Now we really do have a rising trend. Let's go on. What happens? Well, the next, it's a higher high, very good. It means that we could have a continuation of the uptrend. A higher low, very good. Now, what happens next? We have a higher high, nice, but a lower low. So this low is actually a bit lower than the previous one. Now, we could think we have a lower low and the difference, it's a bit more than it was before. So considering this or this. So what happens? Let's see what's happening with the high. The new high is here. This is actually a lower high. Let's continue. Now we have a lower low again, comparing this to the previous one. Now this is actually a downtrend. We have lower lows and lower highs. What happened? A lower high. That's interesting. What about next one? Lower low. The high it's about this at about the same level. That's interesting. Will it be a new higher high and a new higher low, or the downtrend will continue? We just need to see what happens to the next low. Well, the next low is actually lower, so lower low. What about the high? Well, the high is also lower, lower high, so on. So we can go to this high, to this low, so lower low, lower high, lower low, lower high, lower low. Now this becomes very interesting. We have a low here and a high here. What about the next one? Well, the next one, it's actually a higher low and surprise, a higher high. Let's see when another higher low, if another higher low will emerge. I think it will, and after this higher low, we will see the price rally above 107.00 or 107.05. Now, this is the way to understand the direction of the price and to determine whether a trend it is rising or falling. This is the easiest way. You will find lots of things like trend lines or channels or so on and so forth, but trend lines, let me show you what is a trend line, because we are not talking about trend lines in that much in this webinar, but I'll show you because for me it is very, very important to understand what is a trend and how it works, and especially how it helps us in trading. Now, a trend line is the line which actually determines the angle of the trend. If we have a downtrend, meaning lower highs and lower lows, we will have to, and be attentive, we will have to draw a line on the highs. So on a downtrend, the direction, the angle of the trend is given by the line connecting first the two highs, the first two highs. So let me show you. Take the trend line from here, and after that drawing on the first two initial highs. Let's say it is this one. Now this is a very interesting example because I'll show you how to correctly adjust the trend line, and it will be very helpful for you. Those who participate into this webinar and are interested, please contact your account managers, because after this webinar, in the next two days, before the one on Thursday about candlestick patterns, I'll give you some materials on technical analysis, trend, support resistance, and trend lines. I'll make some charts and I'll explain them to you. I'll show you trend lines on different type of charts, different time frames, and you'll get that report, you'll get that PDF if you talk to your account managers, and of course if you'd like to have it. Now, first way to draw a trend line is to get the first top here, the first high, and connect it with the second one. In this case, let me show you, the second one is around here. So you have the trend line drawn like this. This is a good trend line. But here the trend line was broken. Well, usually, in theory, when a trend line is broken, it means that there is a high probability for the trend to change. In our case, it didn't. It just made a new high here. So we just have to redraw this line. And this line was redrawn like this. Now, the current angle of the trend is this, and I would like to make this line a bit thicker, like this. This is the actual trend line. Here it was broken. This was a positive signal, and look what happened. The price rallied all the way to 107, and now it seems that it falls back to 106.23, or let's make it more interesting because we'll talk about this pretty soon. I'll say like 106.11, and you'll see in the next 5 minutes why I took 106.11. A trend line is getting stronger if it has more hits. Let's say now we have two, but there are trend lines which actually have more than two hits. Let's see if this applies here. Yes, we have three hits. 1, 2, 3. Let me see if I can get a better one from these charts. I'll try here. Yes, this looks nice. It's 1, 2, 3, 4. Here it stood 5. Let's say 6. Close, very close. 7. So you had 7 hits. This is a strong trend line here. Now, after this, and I told you I like this example because I'll show you that there are trend lines which will not help you, and this is one of the cases. I told you that if you have a downtrend, you have to draw the line on the first two highs of the trend. Now we did it, and it worked for a while, but after that the trend line was broken and another high was hit here, so we had to redraw the line. The same things happen when you are on an uptrend. Now we have a low, a higher low, and a higher high. Theoretically, we have now a rising trend. So if we are to draw a trend line like this on the first two lows, now it is very important. If you draw the line for the downtrend on the highs, you must remember to draw the line for an uptrend on the lows. It is very important. This is theory, and the thing is that the lows on a rising trend shows you the angle of that trend, while the highs on a falling trend shows you the angle for the falling trend. If you draw the line like this, and let me change the color. Let's say I'll get it red. So in this case, if we are drawing it like this, it will not help us. Why? Because the first two lows were pretty close. I mean, taking into consideration the price range. After that, the price rallied, went all the way to 107, and now it seems to be falling. But for us to draw a very good trend line, we need to have another low, and after that connect this one with the next one. And this will be the next trend line that we will take into consideration, and it will be more helpful for us than the one that we have now. Good. Now, this is recorded, so again, if you like this webinar, the recorded version or the PDF file, please ask your account manager and they will give it to you starting tomorrow after the recording will be finished and the adjustments will be made, and we will upload this on the Forex Rally YouTube channel. Now let's go on, because we have one more subject that I'd like to discuss about, and that is support and resistance. Support and resistance are levels at which investor will react in one way or another. Do you remember what I told you about that flame? If you get burned once, you'll be more attentive the second time, third time, and so on. And the example I gave you with Apple, the same thing is happening here to support and resistance. To help you visualize support, so support is something like a floor. When the price hits that floor, it will bounce back up. And if the price hits a resistance, it's like hitting a ceiling. Imagine throwing a ball to your ceiling and it bounces back down. So this is actually a resistance, a ceiling, while a support is a floor. Nothing can go past the floor, only if you are very, very heavy and you will manage to break that support, break that floor, break that ceiling. So this is the actual idea behind a support and resistance. At this level, traders, buyers will react and push the price back up, while when getting to a resistance, the bears or the sellers will actually resist the pressure of the buyers and will push the price back down, will have enough force to push it back down. Now, let me show you this on the chart. I told you about 106.11 and I said that I will be discussing about this level soon. Well, look what happened. First of all, let me get this line to be a bit longer, a bit more longer. Price fell below 106.12. After that, got back a little bit above, didn't manage to break it and go well beyond this level. Get back underneath. Now hit it, pushed back. Hit it again, pushed even lower. So the pressure here, the power of the bears was higher. Now the price got all the way back, 106.12. Again pushed down. Tried to get back again, 106.12. Pushed back again. Well, what happened here? Sellers were really strong, but buyers got back and broke 106.12 this time. The power of the bulls now was very, very big. It broke it. Usually when this happens, a very strong resistance tends to become a support. So now I am expecting for the price to get back around this level, let's say 106.12, or if I like, I'll just push it a bit higher, and I'll draw it at around 106.14. This is a good resistance level, was a very good resistance level, and I am expecting for the price to retest it, this time as a support. So this could be a very good support. Let me show you a support level. Well, one example can be found right here. So we have this one. It's 109.63. Look what happened. The price rallied all the way up here. Let's see, it's like 110.21. Fell back to 109.63. Got back up to 110.20 and fell again. But this time again was pushed all the way to 110.35, and only after the third drop the price managed to break this support level and well went all the way to 109.06. But buyers pushed it back to this one, 109.55, pretty close to our X support, this time acting as a resistance, and went all the way back here down. Now let me show you another example of good resistance becoming support. Well, this one. Look what happened. The price stopped at 109.05, stopped again, broke this resistance, but when it fell, it actually stopped at this level. The buyers pushed the price, but after a second try, the price managed to break down. So investor remembered that at 109.05 when the price broke, because it was a resistance, look at here, it was also a resistance, here a support, support, support. See what happens in the past. I told you, history tends to repeat itself. So resistance, actually support, 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 resistance here, resistance here, resistance here. Wow, and I didn't know this chart. This is the first time I'm putting 109.02. See? So it happens that it worked very well, and investor remembered this level. Remember that it was a good support, it was a good resistance. So when the price fell all the way from up here, it actually stopped at 109.02, around this level. You will not find a specific level, a level at which the price will stop. It is actually an area of a couple of pips, or more like, let's say, from 2 to 5 pips, keeping in mind that we have a time frame of 1 hour. So this is a very good support and resistance area. Now, as I told you, these are some examples that I can give in the live webinar, but I'll prepare just after ending this webinar, and tomorrow I'll prepare a PDF file with more examples that you can look on, and you can understand better. You will be able to understand better what is a support and resistance trend, time frame, and so on. I'll make some comparison between different time frames, and you'll see the differences between the charts. I'll show you what is an uptrend, what is a downtrend, so on and so forth. So that's about it for today. I'd like you to send me feedback on research@forexrally.trade regarding the webinar, or regarding the future subjects that you would like me to discuss at the future webinars. I told you we have 5 very interesting webinars. Introduction to Technical Analysis, which is this one. We'll have candlesticks and trading on candlestick patterns this Thursday. We will have trading with indicators next Tuesday. Next Thursday, we'll have introduction to fundamental analysis, and after that we'll be discussing about money management. After these 5 webinars, you'll actually be able to make your own strategy, your own trading strategies, strategies with a higher probability of forecast. So, and that will not be everything that I'll give you. I'll tell you soon. Just come and follow our next webinars to find out what is the surprise. It is a 6th webinar which will actually blow your mind. Now, this is about it for today. I'm glad you all could follow me at this hour, and I hope we'll all meet again on Thursday. So have a good night, and I hope this was very helpful for you. I am Razvan Mihai, and again, I am thankful for you being here.